Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, April 21st, 2025. It is 10:25 a.m. Eastern Time, so we're about an hour into the trading day. Remember, we had a three-day weekend. Markets were closed on Friday for Good Friday. As trading week resumes, I'm just going to go over some of the things to watch this week, where the opportunities might be, what to expect in the markets. Remember, one thing I try to do, put a lot of effort into, is identifying market conditions and when they may change. In other words, look for turns on the market, tops, bottoms, whether they're near term or longer term trading opportunities, as well as those periods where you're going to have different market conditions, such as a trading range, sideways trading range, or a price channel, or some ups and downs. So I think we're still in that. We've already hit the bottom of my. There's been different ones, bounce target zones. I'll get to those in a second, but the most recent one we hit again. And so, the bigger picture has not changed, and I have not deviated. The long-term targets are still in play. Long-term accounts, investment accounts, or long-term swing trend traders, I still maintain those deeper targets and, a short downward bias in equities. But there's a lot of moving parts. And then for more active traders, we're in that period where we have some noise, and you can make a lot of what I call mean reversion trades. Right now, we're down 2.5% on QQQ. We're at support. I'll get to that in a second. So probably bounce here. But again, the general and the bigger trend is down. So let's forget about that. If you're not an active trader, I say this time and time again, this is not the time to start trying to learn it and jump in and try to game the market. It will chew you up and spit you out. But if you've been doing this a while and your skill sets are honed and you can trade off the 5 and 1 minute charts and 10-minute charts, 20-minute charts, or 30, whatever, intraday charts, there's some opportunities there. So let's go over the levels. But more importantly, I just like to loop back from time to time, remind especially newer subscribers on the site. If you click on the top menu, resources, I check this all the time. These two down here, you have the different tools of the trades, but the ones I check on a regular basis, especially during earnings season. Now we're out of regular earnings season, but you still have obviously some big names every now and then. The big one this week is going to be Tesla. So keep an eye on that earnings calendar. The big, market leading stocks have the potential to move the market, and then the economic calendar. So we'll look at that. Let's start with the economic calendar real quick. You can see the week right here at glance. They usually put they always do. The big market moving things have a red star. So you can see here, new home sales on Wednesday. Moves crude oil, which can move the market. Durable goods on Thursday. Jobless claims on Thursday. Existing home sales at 10 a.m. Most reports come out at 8:30. Some come out at 10 a.m. or different times. Today we had leading indicators, which is just showing a clear trend of deterioration in the leading indicators. They don't have a star by it, but it actually moved the market today because now, forever and a day, you just had a market with excess liquidity, and economic reports almost didn't matter until we started to get inflation. And now there's all the R word. If you do Google Trends, I'm sure you'll see a surge in the R word, recession. And so that's front of mind now. But I'm going to get to the charts here in 1 second. We're at a support level. If they're going to buy it, they'll probably buy it and get a little bounce here. But I also want to talk about the other things. Because again, I typically lead with stock market coverage, but there are a ton of things out there, and I'm a huge proponent, and always have been, of diversification and asset allocation. I used to be a big proponent when I was a financial advisor. That's part of an investment portfolio: asset allocation, diversification. Don't put all your eggs in one basket. And every bit so much in trading, whether you're active trading, or especially typical swing trading. So we'll get to the other things besides the market here in this video. All right, so that's what we have there. When you look at earnings, I jump forward to was this Tuesday, tomorrow after the close. The big one's going to be Tesla. But again, you can toggle through this when you click that link to the earnings calendar and see tomorrow before we open Verizon, GE, RTX, Lockhart. So you have a lot of you can usually see they'll group stocks, leading stocks in an industry tend to report around the same time. You have most of the Mag 8 stocks, Mag 7, Mag 8, whatever you want to call them, all report within a 2-week window. many on the same week. Same thing. You have the defense stocks, and then the banks. Typically, the big banks report on within a small period too, and so do the regional banks at different periods. So just keep that in mind. And then there's always outliers, of course, and that's why you want to keep an eye on the calendar. All right, let's get into the charts here. That's what I love to do. But I like to keep an eye on the economic calendar. So there we are right here. There's again, these are charts shared with you. I don't think I've changed the levels on this. This is a level I've had here. I don't have a whole lot below that. You see a trend line. And this is, I'm sorry, guys, if I didn't say it. You can see up top, NQ, NASDAQ 100 futures. I'll get to QQQ in a second for you. 3-month chart, one of my favorite time frames, hourly chart. There's a downtrend line right there. There's the uptrend line support, and you can see this line here. It's not super duper support, but it's about the last decent support we have. And again, I think a little hurrah here, because again, this is the choppiness I've talked about for the last few weeks. And you can just almost, there's no set number, but volatility is elevated. So somewhere around the 3%, you were seeing about 5%, even, back here that we're going down 6% a day easy. And volatility is abated somewhat. The VIX is pulled back down. So you get those 3% drops to support like this right now as I'm doing the video. And you can take a shot there if you're an active trader, or you can play it safe, wait for a breakout there. Or you can sit tight, again, if you're a long-term swing and trend trader, and go for the prize. If you're new to the site, the prize hasn't changed since last year. The prize are the long-term targets, T7 current being the current final target, down here at 260.56, calling for about a 52% drop in the NASDAQ 100. We hit the targets were laid out first last year. When we hit T2, we also hit the 200-day moving averages in every key stock, not just the big tech stocks. I had the financials, everything hitting support. So we covered there. Hard reverse, expecting a bounce. It was, not just a typical target. It was one that at the time it was laid out, we wouldn't know when we hit it. Again, it was laid out before then, where I gave the market top range. We went a hair higher. There was a breakdown there. And so most recently we hit T3. Now, one of the things, if you recall, if you've been with me since last year, repeatedly, coming into this year, I should say, late last year, coming into this year, I continually updated and reiterated my preference of this scenario, even with the market punching out to marginal new high, big divergence, everything I talked about, bubble-like qualities in the market, and everything else that I said. It wouldn't surprise me if we had just a little hiccup or even went through T3. Now, when we hit it again, I covered for the reason saying, expecting a bounce. We got a pretty healthy bounce, that 16% bounce I was looking for. And that's probably it, because when you go to the daily chart, now we could go a little higher. I give you a bounce target zone here, and we just hit the bottom of it, and we almost hit it. Well, we hit it twice last week, a couple weeks ago. That big 1 day right there, that biggest single day gain in nearly a quarter century in the NASDAQ. And then we hit it again there. So that's probably it. That's what I'm going to go with now. Most likely it. If we have another run up, then it'll be the same story. It'll be objective to short up to, but not above the top of the bounce target zone, or that 500-ish level right there on QQQ. But like I said, it's almost eerie how it's playing out so well with break of the 200s, perfect back test. Back then, that was my bounce target zone. And then again, another leg, another bounce. And so far, a pretty impulsive rejection there. But like I said, other than the economic indicators that came out today, and just the craziness spewing out of Trump's mouth. I don't know if you read the tweet that he did. It's so childish about slamming Powell today. You can look that one up. I'm sure you'll hear about it on TV or read about it. Either way, and what he's doing. I can't get in the guy's head. I really can't. I can't try to rationalize his thoughts, why he does things. But what that tends to do to somebody when you're calling him out, calling him an idiot, and all the names, all the names that he's throwing out and trying to insult Powell, you kind of then put him in a position where if he does cut, he looks like he's cowing down to that type of behavior. And so, in my opinion, it's going to make Powell less likely to cut. Whether Trump will come in and fire him outright or what, we'll see. It's already. Anyways, that's what's going on in the state of the nation here. And I talked about this before. Powell. Listen, I'm not a big fan. I think the Fed's been forever. Every Fed chairman that I can remember, going back many, many, many years, has been way too dovish, way too easy. With the hitting the button as soon as there's any little hiccup in the markets or the economy, and flooding it with liquidity and excessive stimulus. So, however, at this point in time, like I said, things will break. We go down. Okay, I had to stop the video there. My wife needed help with something real quick, trying to remember where I was. Paused here. I was talking about these. Anyway, that's the longer term, bigger picture. But until then, this week with a lot on the economic calendar, it could very well be a straight ride down. That's the nature of a bear market, but I suspect more ping-ponging. So I just showed you NQ at support a second ago. It's not great support. You can see I have a little line there, but this is my 60-minute chart of QQQ. There's a gap in there right there, and a reaction low. Traders will focus on these reaction lows. If you're going to have a mean reversion trade, like I said, it's not just because there's no set number. It's not, we're down 2.21%. We were down a little bit more when we hit that level at the low that I was just covering a second ago. And that's where I think it's objective, and that's how I'm trading it lately. And then in my long-term accounts, still I'm sitting tight on swing shorts there at the moment in the long-term accounts, with some room to add. All right, so that's it. That's where we're at. Obviously, we take out the recent lows. That's going to sharply, in my opinion, increase the odds that we're going to go hit T4. It's not too far below, and then you can see we'll zigzag down, but it's going to take a while to get down to T7. Barring some type of market crash. Right now, I don't see that as a very high risk. I'm talking outright a real crash. We're talking, not like this is just a pretty impulsive leg down. We never hit circuit breakers. So when I say crash, a real crash are going to hit circuit breakers. And things I watch, and I don't cover every day, but I continue to watch credit spreads. They've certainly ticked up as expected. And I've told you for the last nearly a year, I think they've been grossly mispriced. In other words, the risk hasn't been priced in the market, but they haven't blown out yet. And if they do, then that's a thing that shows you problems, because if credit spreads blow out, those are lower rated companies, the debt for low rated companies, you're going to start seeing a spike of defaults, and that has a ripple effect. Hedge funds blow up, pension funds have problems. Right now we're reading about, or I just read about some of the big endowment funds such as Harvard and all that kind of getting hot water with their, because they went knee deep into private equity in the last few years. Private equity is very liquid. That's one of the things about it. They get to do mark to fantasy, I call it, or I didn't make that term up. It's an accounting term where you get to value your assets at where you think they are, because these are illiquid assets. This is just PSP. They hold. It's a ETF that holds private equity companies, and the thing about it, so they're more illiquid investments. They trade really like small micro caps on leverage. That's kind of the business model of private equity, but they get to make up their valuations until they have to liquidate something. And you're seeing now they're saying that Harvard and the like, some of these big college endowment funds are liquidating, and then when something has to be sold, then it resets the market price. So in other words, if you have an asset, you're pricing it 100, really on paper, if you had to sell it, it's going to be 60 or 70. You can keep saying it's 100 if you want, because there's no comparable sale. Think of houses in your neighborhood. Think of Zillow. Let's say you live in some remote little pocket in the middle of nowhere. And the last home that sold in that neighborhood was $500,000. The last 3 homes sold were $500,000. But the real estate market has gone down in that area. There's something going on. There's a big prison being built. Houses are for sale, but nobody's sold yet. Prices keep dropping, and people are asking $400, $350. When they start to sell, now you have a reset on prices, because that's what comps are used at. And so that's kind of, if you can go with my analogy there. So we'll see. I've been talking about private equity as one of the big shoes to drop also since last year. And you can see the PSP is already down from that divergent high to my 51.31 target, down 25%. Plenty more downside. I have all the confidence this thing will be back down to at least this 47-ish target, if not longer. That's just a daily chart. I go out to the weekly charts for longer term targets. But again, nothing goes straight down. You get really oversold. The rubber band gets stretched. You were deeply oversold there. and see how to snapback rally. So, all right, so that's kind of big picture stuff, near term picture. Ping ponging, but be careful with that because we've already, once again, just to reiterate, we've already hit that bounce, the bottom of that bounce target zone, which may be it. And so far, if I'm correct, and we're in the beginning stages of a much longer and deeper bear market that's going to last more longer, go down more and last longer than previous bear markets in recent history, and I'm talking for decades, then this is sort of a tell how this one has started out, right? Very, very impulsive, right? Nothing like so far a much more powerful kickoff to this is more of a correction back in 2022. So we'll see. So we'll try to navigate it best we can. Let's start talking about some of the other stuff. Let me just eyeball the S&P 500, see if there's anything there to mention to you. Not a lot, just sloppy charts again, just kind of grinding around. This was what last week. I would expect just a kind of a sideways grind, and that's it. And that's what we have. And we're kind of towards the bottom of that grinding range. We'll fall out of it maybe this week. Maybe Tesla will be the catalyst. Tesla's been beat up pretty good. Let's just talk about Tesla before we move forward. Back here, when would have been, let me check the date, back in November 26th of last year, gave you 6 targets on Tesla. T1, 2, 3, 4, 5 have all been hit, so I suspect T6 will be hit. Based on the look of this, and Tesla's been beat down hard. We all know that. I don't have to tell you that. The stock's down 56%. But I'm going to pull this line here. So if you drop after earnings, T6 was my final and still is at this point in time, kind of final near-term target. Yes, over time, I think it'll go lower. Only because if I'm right on the stock market, I have to adjust this trend line right there. You break this primary uptrend line, we're going a lot lower. And Tesla, if the stock market's going to drop down to that T7 on QQQ, it's going to bring Tesla with it. But just kind of near term, post earnings pop, we hit T6 198. It's decent support, but it's also going to bring the stock market down, and then could test those recent lows. I'm not going to make a call here. I don't have a strong opinion. I don't think the bottom's in Tesla. There'll be plenty of very lucrative bear market rallies. That's the nature of a stock like this. I just want to kind of give you an update there and tell you, since they're reporting, that could bring it down there. And then that would put in a nice, extend the existing positive AK bullish divergences that were in place at that last low. That one there, you had a divergent low. And I'm going to just measure for you from where it hit bottom. The stock rallied 30% in just a couple days, right? This is a daily chart. 1, 2, 3 days, it was up 30%. So it's the nature of that stock there. All right, what else do I have for you? Let me start out with some of my favorites, and that's Bitcoin. I highlighted while the markets were melting down or selling off pretty hard, I had highlighted to the unusual and said, look, maybe not be a trend yet, but it is something. It's been for a few weeks now. I highlighted the fact that the markets in that last impulsive leg down, this whole thing here, Bitcoin was really holding up, and so it's finally acting as many had intended and hoped it to be, which is an alternative to the status quo, to the rig system, whatever you want to call it, free from the Fed's shenanigans, corporate malfeasance, and all that other good stuff. And so I've highlighted it recently. We had it as a short before, but then we covered, and I told you my thoughts very clearly when we hit T3 right here that I expected a bounce, and we did, or T3. We never made it all the way to T4. Told you we had positive divergence. So far, so good. Check market. Broke out. Remember, I give you this downtrend line, this bullish falling wedge defined by that downtrend line. Right there, the 2 lines I just drew are the bullish falling wedge. We had a breakout last week. I highlighted back test and moving up. And here's another example. The market's down today, pretty good, and Bitcoin's up another 4%. It is a 100% now disconnect here. If you don't, here, I can show it to you this way. You turn off all the lines. all the drawings, edit chart properties, compare it to QQQ, which is the king of the risk on indexes. And you can see, as I said, it was a super tight positive correlation, tick by tick, moving up and down with the stock market. And then this is a disconnect I talked about recently, and you can see it here. This is where that last big leg down, and Bitcoin didn't really rally, but it stopped falling too. It held up. And now we have that complete disconnect. And I think a lot of people are seeing what I'm seeing. Gold's been hot, very hot. Gold's been hot because of the plunging dollar. Dollar just hit multi-year lows. That was the first post I got out to you today. Gave you my thoughts on the dollar. That has a big impact. Gold, by every metric I'm looking at, is in the midst of what appears to be a blow-off top, at least a near-term buying climax. Also, to be clear, I'll get to gold in 1 second. Somebody said last week, oh, he's short gold. No, I don't trade gold. If you follow me for a while, you know I typically will trade in lieu of gold, either silver and or the miners. And that's still what I maintain right now, because you typically get more bang for your buck. Plus, gold's getting right now, there is the drop in the dollar, which I showed you talked about today. That in itself will make gold go up. A falling dollar takes more dollars to buy an ounce of gold. So that is a net tailwind. There are periods, and there were earlier this year, a period of disconnect where the dollar was rising, gold went up. That's due to overwhelming demand. We all know that central banks have been buying gold, retail investors, but now Bitcoin's kind of taking over too as a, hey, where'd I put my money right now? Everybody's freaking out. The stock market's dropping, the big tech stocks drop, the banks, the whole stock market's going down. And so they're looking for flight to safety bids. Problem is, gold's been a very crowded trade. And as I often say, gold will get the flight to safety bid, not silver. Silver typically follows gold, and not the gold miners. They will often follow gold, but in a bear market, I have seen periods where they get sold down because the gold mining stocks are just that, stocks. They're not gold. And so they often get sold down with it. So either way, I wanted to show you this recent, so before we had the stock market falling and Bitcoin stopped falling. Now we have the stock market going down and Bitcoin going up. And again, to me, it's, look, we can sit here and I can point out those correlations, but you guys know me. I will never take a trade, or very, very rarely will I take a trade if I can't confirm it on the charts too. I'll give you my fundamental ramblings, my fundamental thoughts like I did here, but also ultimately, it's the charts. So let me go to Bitcoin. This is BTC, the actual Bitcoin crypto, traded on the Paxos exchange. You have the beautiful downtrend line I've been highlighting, the primary one. We had a minor trend line here. You had positive, aka bullish divergence right here. I don't know, some of my lines sometimes on this charting platform will disappear, divergent low. And then so far, and now it could fail, but right now we have a pop. I'm trying to circle. Let me zoom in for you. We have a breakout above the primary downtrend line right there. Right there. That's the primary downtrend line. Nice and clean. Lots of clean reactions on it, including more recently. So if it can pop, you can see 9100. I'm going to add additional targets for you now in case we get some traction going on this trade. The next target there, 94,392-ish. We'll just see, play it by ear. So, Bitcoin, for the most part in the last couple of years, has been a risk-on asset, meaning when the stock market's rallying, it's going up and vice versa. So be careful there. Like anything, don't load up. I just want to point out that it's today's another good day where it's going up and the market's going down, and it's showing you people are now, for whatever reason, maybe that trend doesn't last, maybe it gets built upon. They're buying this as a flight to safety asset. And again, it's simple. We saw it in 2022. It was predicted by myself and some others that the old 60-40 model doesn't work anymore. You can't count on it. Forever and a day, for decades it worked, meaning 60% of your money in stocks, 40% in bonds as a general rule for a long-term investment account. And that got blown up with that. And again, the blow up is DC, Washington with fiscal stimulus, and then mostly the Fed with excessive monetary stimulus. And again, the word excessive. Plenty of times the economy was on fire, strong footing, solid footing. Stock market was strong. They just kept going with the easy money, zero rate policy, and they completely destroyed the mechanism of price discovery, and the whole grand experiment's failing now. And so that's why bonds, everything's tipsy-turvy, and you can't rely on the old things that worked forever and a day, again, because the Fed went overboard with trying to manipulate and control and keep rates artificially low for too long. And this is why one thing. So where I'm going with this is, again, there's nowhere to hide anymore, other than very few places. Gold, obviously, everyone's been plowing into gold, but you got to be careful. There's a hot trade. Let's look at gold. Before I leave crypto, there's BTC. And my preferred proxy, Bitcoin futures, BRR. There's the same downtrend line, clear breakout, right at resistance now. So maybe a little profit taking here. And we'll see if there's a true risk on, risk opposite correlation to the stock market now. Maybe the stocks will rally where I said on that support level. We get a little pullback, profit taken in crypto, but I don't know. I still think it's it's a way to just diversify. It's a new asset class. When I started the industry, oh God, how long is that? I don't even want to date myself, but it's mid 90s, 95. It's been a long time. 30 years. We had really the main asset classes were stocks, bonds, and you can call cash one. So you had stocks, bonds, and cash. And that's how you had to allocate your portfolio. Within stocks, large, mid, small caps, international stocks, domestic stocks, bonds, you had, treasuries. There's different subsets in there. And now you have a new asset class. Now you could have considered, and commodities, was one of the other asset classes. And within there, all different types. Gold falls in that range, agricultural commodities. And now you have crypto as a new asset class. Like it or not, I don't believe in it as far as I can throw it, but I don't care. Fundamentally, there's no value. It's just code. But it doesn't matter to me. If a chart says buy something because it's going to go up, I'm going to buy it. I don't care. I'm buying stocks that sometimes I'm certain are headed towards bankruptcy, but I'll trade a bear market rally or whatever other thing there is if I think the bankruptcy, is going to be down the road more so. Again, so don't get me wrong. And what I'm trying to say is there are times I'll buy a stock, and almost all times based solely on the technicals, despite how bullish or bearish the fundamentals are. Same when I want to short something. All I can tell you definitively, guys, again, breakout, and I can tell you definitively crypto has been rallying lately, and it shows a clear 100% reversal, complete flip-flop change in character. And maybe it continues, maybe not. And it could be pretty big because remember, there's a finite amount of Bitcoin. And I'm also, I gave you guys Ethereum too as another way to diversify within the crypto arena. Those are the two big ones. Me personally, I never have dabbled with nor never will shit coins, the altcoins. Nor are they on the, again, I'm futures trader. I don't have a Binance account or any of those. I've never bought crypto direct. Sure, I wish I could tell you I went back 10 years ago and loaded up on Bitcoin, but I didn't. But I trade, the futures. And this is Ethereum, ETH, USD, and see that one's poised to break out. I shared it with you last week. It's been moving up, but nothing big. Pop that trend line. You have a little gap there, 1767 right there. Once it takes that out, probably run. That's a nice. All these are targets, every line on this chart, but that would be a nice interim target if we can get there. I'm going to measure it out for you. I have to do it this way because if I grab where we are, then it'll move all my other trend lines. So that would be, if we break out the trend line, I'm talking almost a 45 something percent rally there, if so. And look, sometimes things start to look really good. You get excited, you're ready for the breakout, and then they just crap out. Remember, this is, let's call a spade here. I'm going to, although I try to, I call this right side of the chart because I try to look at the chart and predict what's going to happen. If this is most, charting platforms, you see I put a lot of white space to the edge, but this is how a chart is. So there's current prices are right there. I try to predict what's going to be on the right. That's why you see a lot of blank space on my charts. I look at what's on the left side of the chart from the current prices. This is where we are in time right there. And I look at this to predict what's going to happen over here. And I just hit the wrong button, made it go away. Let me find that. Okay, back to that. Well, I toggled to a different one. I was showing you the futures. This is the actual crypto, ETH. It's going to be the same chart, just the actual crypto if you want to buy it. Yeah, ETH. I'm on a different time frame. There's 3-year daily. There's your positive divergence. There's that downtrend line I showed you. There's that same trend line. Remember, I was on a shorter time frame a second ago, and it comes in with nice resistance. So again, that's that 45 or so percent. Should be pop there. Let me find that other chart. I have a gazillion charts going down here. I've got to look at my taskbar. Let's go back to the one I was on. ETHUSDRR. Again, the futures. That's it right there. All right, so that's it. So, you can set a price alert. There's a buy point one. If you take out the trend line, you want to take out that previous high right there. I have it about 1694, I'll call it about 1700. Then gap, once entered, usually backfilled. They might backfill a gap, and then if they do, you could then look to buy a back test of the trend line. I know I'm getting a little granular, but that's what I do. I like to kind of see trades, before they even happen. I kind of visualize how it might happen, and there's different scenarios, but how I'm going to trade each one if it does, and my most likely. So there's the uptrend line again. You could break this and keep going down, because what I was trying to say before I pause the video there, make no mistake about it. No mistake about it. Look at this. That is a textbook downtrend. This thing isn't a downtrend. This is where I started to go off on that rambling, right side of the chart thing, looking for trend reversals. 99 out of 100 people are going to look at this and say, that's a bear trend. What are you doing? You want to short that stock? And you can short rallies to resistance. That's the only objective trade, or wait for a breakout. Now, remember, I threw this one as a trade idea out here last week based on ETHE, I think. Yeah, I think it was this one. And did I do daily? Where it is? Oh yeah, off support, that long-term support right there. So we're up a little bit, not much. Bitcoin's the one getting most of the action right now. It's just kind of like gold. Gold is gold standard. Bitcoin's a gold standard for flight to safety bids. So, but Ethereum, I think, will follow. It usually does, and so that's it. And again, to me, guys, it's a way to diversify. That's all. It's up 3.35% today versus GBTC. That's this other first to market one, 4.10. So close there. Here's the daily chart. All right, enough on that. It's one trade idea. Take it, don't take it, up to you. And then there's the little things that don't move with the stock market. That VERV I threw out last week, and I gave you these levels. Hopefully, if you're interested, screenshot the chart. And so when I highlighted it, we were here, and what we did is we pulled back. It was an excellent opportunity. Pull back to support. I added to that. My plan was to add two, but not below that level. I don't want to see. I won't stop out right away because I bought it in pre-market. I told you back then, post-market. I'm sorry. After I read the article, that I think it was that day, or that was during the day. Yeah, it was that day in post-market. And so, I will hold tight for a while. Still, I don't have a huge position because it's a very speculative stock. But this is a very objective entry, these levels. So this is how you trade stocks. It's trading 101. You either buy, when you're going long, when you're bullish something, you either wait for a breakout above resistance, such as that downtrend line, for a buy signal, or you buy pullbacks to support. That's it. Those are your most objective entries. Anything else is kind of taking a shot. Now, you can always just take a shot, but it's not objective. I like objective entries. So there it is. So we actually pulled back twice. So after the big run up, I showed you we had 1, 2, 3. So I had 445 on that chart for very good reasons. It was solid resistance. It was solid support right there. Support broken. It plummeled down. Then the reversal came. Look at that big bullish engulfing candle, bottom, a reversal stick. Then the return. And again, it was excellent support. Support once broken becomes resistance. We popped through there, took out the resistance, which made it support again. And you had 1, 2, 3 opportunities to buy it there since highlighted. And today, right now it's up 12%. At the highs, it was up about 25%. And again, these are all the targets up there. The downtrend line's a big one. That's where you'll probably see the first decent selling. And then ultimately, if that gets taken out, then that's longer term bullish. And again, I'm bringing this up now, not just to highlight a speculative, low priced biotech stock, but this has about a 0% correlation with the S&P 500 because these low price stocks are not components of the index. Problem with the S&P 500, live by the indexes, die by the indexes. If you're a heavily indexed stock, especially one of the top holdings, you're subject to the inflows. When the stock market's rising, everybody's buying. They're throwing money in their 401ks. They're buying the S&P 500 index funds. They're buying SPY, ES futures. And when you're in liquidation mode, money's coming out of the market. So what happens? The stocks that are in the S&P 500 get sold proportionately to their weighting as money's coming out. It's that simple, right? So you want to, and what I'm doing in this video, you can get the theme here is, where to make money other than shorting, because I know not everybody's comfortable with shorting. And then on that, something I should add, and I've covered this in the past, but in my longer term accounts, when I started scaling back into the long-term short positions, my preferred proxy on some of those accounts I did was PSQ, because it's the non-leveraged. So I'm going to go over that real quick. This is something I've covered many times in the past for subscribers. When you have a unidirectional rip or dip, such as this is what I call a unidirectional drop, meaning it's almost straight down. This is a unidirectional rally, meaning nearly straight up. And I say this because I've never seen it written. I'm probably the only I've talked about it, wrote about it years ago on my site. The leverage ETFs, especially the 3 times, will do better than the non-leverage. In other words, instead of going up 3 times what the NASDAQ 100 does, they'll do over 300% or 3 times. Only on the unidirectional rips and dips. Where you lose, everyone talks about the decay and they should only be day trading instruments. That's in a sideways grind. And again, it's all explained right here. I've covered this often for subs, but if you're new to the site, right here, go to the FAQ page, then click on ETF related questions right here, and then go down here. Is there a disadvantage for holding an extended ETF period of time? And I give you the math here on how that works, and I've covered it many times. So where I'm going with that is, if you are uncertain or, like me, suspected, as I have for the last week or so, that we'll kind of grind around for a while, be up and down. Ultimately, if I look out 6 months ahead, you put a gun to my head, a year from now, 6 months, do you want to be long or short? Make a trade, throw away the key. Yeah, short. We're going down. We're going to hit T7. That's what I believe. However, until then, there are these periods where the market's going to grind around due to uncertainty, waiting on economic reports or big earnings reports, or what's going on with the trade wars, or what's going on with Powell and Trump, latest battle. And then you're going to grind around. That's where you get the decay. That's where you don't want to hold. So if you are holding out for the prize, and you don't short QQQ, you don't have a margin account, and you don't know how to short, you want to just buy an ETF that'll short for you. Well, with the Qs, you have a few options. You can short QQQ. Let me turn off all the lines. Of course, obviously. You can, on the short side, you can buy QID, which is 2 times short the Qs, or you can buy SQQQ, which is 3 times. That's simple. So you pick your flavor of leverage factor. Or you can buy PSQ, which is a non-leveraged. Same thing with the S&P 500. When you want to short, you can buy SH. It's a non-leveraged short. You can buy SDS, which is a 2 times short. Or you can buy, SPXL, I think. It's a 3 times, or SPSX, 3 times short. So you pick your flavor of leverage. And I do that according to what I expect to come. Am I looking... For example, go back and use some real world examples. On Liquidation Day, which is now known as, Trump called it Liberation Day, I gave you a level that I said would be lights out for the market right then before that day. And that was it. That was, where was it started this whole thing? Whenever that was. I forget now what date that was. And we had that huge slide down. I think it was here, right here, somewhere in there. And so that's what started the big sell-off there. And that would be a great example, because I said it would be lights out if that level was taken out, which it was that afternoon, shortly after his speech. And then the whole biggest drop in years, the most impulsive leg down came. That's when you want to be in. For example, if you don't trade futures, you can use those leverage ETFs. But when you get in a grinding market like we have been, it may take a while for the next leg to break down. In worst case scenario, let's say it does have another impulsive drop. We just get rejected and we start waterfalling from here. You're still making money on that short. You're just not capitalizing on the extra math, if you will, for using the leverage ETFs. And that's fine too. There's nothing wrong with that. You're catching the move with PSQ or SH. Okay, guys, I'm looking at the clock. I'm right at the 39-minute mark. Just rolled past that. I was going to get into commodities, but in commodities, it's so broad-based. I'll just hit on gold, and then we'll move on. And remember, gold is gold. That's what the flight to safety has been for long since before I was born. All right, it's just been around forever. And again, I've talked about if you turn off all the lines, especially if you look at a weekly chart with all the lines off, this is and by the way, guys, I use log scaling. You put a non-log, you put a arithmetic or linear scaling, you can see the parabolic move, right? That is a parabolic move. One thing I've said repeatedly in my life, I've never ever seen a parabolic move end well. So, from that usually comes not just a little pullback, but a pretty impulsive mean reversion. We saw it in cocoa and orange juice future prices. We saw it in natural gas, especially when Russia invaded Ukraine. I'm sorry. And so you can see it again. I've talked about the volume patterns, and I talked about we were in it, and it can continue. That's the thing about a blow off top. Go look at 1999. You started to recognize it. It just kept going for a while. So when the reversal comes, however, as I said earlier, and last week, corrected someone, I don't have a position in gold. Silver is my proxy, and the miners, and I do have positions in both those starter positions, which I said I'm waiting for some decent sell signals to add to. What are those sell signals? Well, they're going to follow gold. So I gave you last week this trend line. We're still above this trend line, this uptrend line. That would be a big start. Any other type of candlestick reversal pattern, I've named some recently or highlighted some to look out for, but they haven't materialized, such as the island cluster tops. Look for a bearish engulfing candlestick, and there's a gazillion others. There's a lot of sources for that. One of those, you can go to Bulkowski's visual index. Just Google. It's called the patternsite.com. They have different candlestick patterns you can see here. You can go alphabetically. You can do a visual. Here it is. And see all the different types of candlestick patterns. That's one of many sources out there. And again, there's a gazillion types of candlestick reversal patterns, continuation patterns, and the likes. So those are some of the things to look for there. But then again, remember, gold has the flight to safety bit. Gold, look at gold, all-time high parabolic move. Not so much, clearly all-time high. I just showed it on the weekly chart. But silver, but you go to the weekly chart, unlike gold, is not going all-time high because it's not the flight to safety bid. And it has more of an industrial component than a flight to safety component. Gold, silver are both precious metals. They're industrial metals, so they have both uses. But so which one is it? Is the economy tanking or going down? Are we heading into recession? If so, think about it. Is there going to be a higher demand for gold and silver in electronics and in manufacturing, or a lesser demand? Tariffs aside, tariffs will get settled. We're not going to have an indefinite trade war. The world the economic system would crumble. There will be resolve, whether it seems that way or not. There will be. So strip that out of it, and then just then you have the pure supply demand. At the end of the day, if they're not building as many cars and planes, trains, automobiles, computers, they don't need the silver and the gold that goes into circuitry and that component. You're also in a recession. Boyfriends aren't buying their girlfriends as many gold tennis bracelets, right? That all makes sense. So, and same thing with silver, which is also a precious metal. And the charts say it. You can see big divergent high. Been building for a while. Trendline break one. Oh, trendline one break. Back test. Rejection. Big red candle. And back testing that secondary trend line now, and also lagging gold as it should be, as expected. And that's where I think the opportunities are. And then GDX, remember, these are gold mining stocks. They don't, they're not gold. It's not gold bullion. Yes, they do prosper and benefit, I should say, net benefit from rising gold prices. But at the end of the day, I've seen plenty of stock bear markets where they got knocked down even when gold was holding up, because again, gold is the flight to safety asset. These at the end of the day are just equities. They're held, some of these, within different mutual funds, not only the gold mining ETFs. And you can see it's stalled out. It was following gold, but lately it's kind of stalling out. It broke the uptrend line. And so there's that. So those are the two I like better than gold, for shorting. And let's wait and see some decent evidence or reversal, and for a reason to add to those. I said I'd stop, but I'm just going to hit USO, crude oil. USO, I follow more of the charts of CO. I do watch USO. at resistance. Crude, again, if you're going to buy into the economy slowing recession scenario, you get demand destruction for crude oil. Less people taking vacations, so less people flying in airplanes, less people driving their cars and RVs on vacation, people getting laid off at work, less people commuting, right? Less people boating and fishing and all that good stuff. So crude will fall then for demand destruction. And so it also at resistance. Hold on, let me get you CL. Okay, this is CL. About 2-3 weeks ago, I put it out as a long trade idea in one of the videos. I looked for the chart. I didn't make a static chart, and the futures rolled. We're now on the June before it was the previous contract, and I gave you two targets. T1 was somewhere about here. T2 was either here or here, and we hit them. And so we've come full circle, and crude's starting to go down. I don't have a strong opinion, nor do I have a position right now. I do have natural gas. I shared that with you last week. I took a starter, plan to add to it. If crude falls, which is kind of where I'm leaning here, that usually helps natural gas go up, because the lower crude prices go, we're at 62 right now barrel, you start seeing wells shut down. It's not profitable, so certain wells, if you guys watch Landman, you know this, they'll start capping wells as the price falls, because it's not cost effective anymore to keep certain wells going. So what happens, you get demand, natural gas being a byproduct of crude oil. When those pumps are gushing, you got natural gas coming out too. And so natural gas will tend to go up often and when crude falls. Not always, but often. So there's, and again, I'm just going off different trade ideas that are uncorrelated to the stock market. That's the one thing there. You have natural gas. I shared it with you last week with a bullish falling wedge pattern. Said you could take an aggressive short entry. You had a support. We're a little bit below that now. There's another reaction low here. Even better support right here. Bottom line, we haven't broken out, so there's no buy signal yet. Waiting for a breakout there to add to that. It's, to me, worth a little starter position, because you have the positive divergence. Crude or nat gas can reverse pretty quickly. So anywhere in there, likely to reverse. And again, a breakout of the downtrend line. And just looking for a bear market rally. That was my long-term swing target. 490 hit, exited and reversed. And we've just been swing trading the bounces and getting back in long, short. So that was a kind of a long-term buy and hold. Of course, we gamed a lot of the ups and downs, the pullbacks along the way. I'm just kind of recapping. So the bigger picture is, I think, I don't have a strong opinion. I think we probably come down here, and that's a pretty good support level. We may hit a floor. Near term, like I said, I'm waiting for a pop above there. And again, it's something that has nothing to do with Bitcoin, nothing to do with Apple, or the S&P 500. It's just its own little thing. Trade it, don't trade it. Just trying to share different ideas that are uncorrelated. And we will stop the video here and we'll see what happens. This has been Randy Finney with Right Side of the Chart. Have a great day.